Welcome to The Explainer. Today, we're focusing squarely on a vital piece of your CPA exam journey, Area 3 of the BAR exam, which covers state and local governments. Think of this as your high-level mental map for the entire state and local government section. Now, we aren't going to do a deep dive into a single, isolated formula today. Instead, we're building the architecture of how you should think, how you should process, and ultimately, how you're going to conquer governmental accounting questions. Having this structural map in your head, that is exactly what separates the candidates who struggle from the ones who confidently pass.
Okay, let's dive into our agenda. We'll start with a welcome to Area 3, map out the specific topics, and explore this completely different accounting language. Then, we'll look at how the questions actually work, break down a really handy 6-step framework, and finally, uncover some common traps.
Welcome to Area 3 and the Mindset Shift.
So here's the core paradox of Area 3. If you look at the AICPA blueprint, this is actually the smallest area of the BAR exam by weight. It makes up just 10 to 20% of your score. But here's the catch. It requires the absolute largest mindset shift. You literally have to abandon the familiar for-profit corporate accounting logic you used in Area 1 and Area 2. You're stepping into a completely different realm now. The goal isn't generating a profit anymore, it's public accountability and managing limited tax dollars. So your golden rule here is this: orientation before calculation. Doing the math is totally secondary. The most essential action you have to take is orienting yourself within this entirely new reporting system, language, and logic. Honestly, a lot of candidates fail governmental accounting questions before they even pick up a calculator, just because they haven't stopped to ask themselves, wait, which accounting world am I standing in right now? Your success depends entirely on recognizing your environment.
Section 2, Mapping Area 3 Topics and Getting the Lay of the Land. Now, we aren't going to master all of these right this second. The goal right now is just to identify the puzzle pieces that make up this governmental accounting ecosystem. The first major piece of our map is the Annual Comprehensive Financial Report, or ACFR. This is the ultimate massive reporting package that a government produces. Inside that, you're going to find government-wide financial statements which give you a broad economic view of the entity. You've also got 3 distinct categories of funds: governmental funds for day-to-day public services, proprietary funds for business-like activities, and fiduciary funds for holding money on behalf of others. We also need to map out critical reporting elements like the notes to the financial statements, management's discussion and analysis, required supplementary information, and some complex reporting entity issues. And perhaps most importantly, you'll need to really understand reconciliation. That's the required process of bridging those short-term, day-to-day fund financials back up to the broad government-wide level.
Moving right along our map, we encounter the concepts of net position versus fund balance. Think of fund balance as measuring what's available to spend right now, while net position measures long-term economic health. You'll also need to navigate how capital assets and long-term liabilities are treated completely differently depending on your perspective. Then there's interfund activity, basically how money moves and is accounted for entirely inside the government itself. We also tackle non-exchange revenues, like property taxes, where governments receive value without directly giving equal value in return. You're going to learn the critical terminology difference between expenditures in funds and expenses in government-wide statements. And finally, budgetary accounting and encumbrances, which is just how governments legally track purchase commitments before a bill is even paid. I know, these concepts sound a little intimidating up front, but I promise you, they all fit into a highly logical structure once you understand the underlying rules.
Section 3, a different accounting language, corporate versus government.
Learning Area 3 is honestly like learning a new dialect of accounting. You just cannot use your corporate translation tools here. Let's contrast the 2 main reporting perspectives you're going to face on the exam. First, we have government-wide statements. These look at the long-term economic picture, very much like a massive corporation does. They care about all economic resources, meaning they track big capital assets like bridges and massive long-term debts like pension liabilities. But on the flip side, we have governmental fund statements. These care strictly about short-term, spendable resources. Think of a fund as a strict checking account. It only cares about the cash currently available to pay this year's bills. It's an entire lens of short-term fiscal accountability, which means long-term assets and long-term debts simply do not belong here.
And because of those 2 totally different perspectives, we actually use 2 completely different accounting methods. Because government-wide statements take that long-term view, they use the full accrual basis, just like standard corporate accounting. Revenues are recognized when earned, and expenses when incurred. But governmental funds rely strictly on the modified accrual basis. Here, revenues are only recorded when they are both measurable and available to spend right now, typically within 60 days of year-end. And money going out?
That's recorded as an expenditure when it is legally due and payable from those current resources. This fundamental distinction between full accrual and modified accrual, that is the beating heart of Area 3.
Section 4. How Area 3 questions work and testing your perspective.
All right, now that we have the rules of the language down, we need to prepare you for exactly how the CPA exam is going to test it. Like I mentioned earlier, the exam rarely tests your ability to do complex math in Area 3. It's testing whether you know which set of rules to apply. Let's look at a quick mini example. A city buys a $4 million building. The math here is essentially non-existent, right? But the exam asks, is this a $4 million expenditure or is it a capitalized asset? If you answer instinctively, just using your corporate accounting background, you're going to immediately say capitalized asset. But in Area 3, you actually can't answer this question yet.
The correct answer depends entirely on your perspective. Perspective literally dictates reality in Area 3. If the exam asks how this is reported in a governmental fund, the answer is a $4 million expenditure. Why? Well, because under modified accrual, you just used up current financial resources from your checking account to buy it. That money is gone. But if the exam asks how it's reported on the government-wide statement, it's a capitalized asset that will be depreciated over its useful life. Why? Because government-wide reporting uses full accrual and looks at all long-term economic resources. It is the exact same underlying transaction, folks, but two completely different reporting results based purely on which accounting world you're standing in.
Section 5. The 6-step framework for solving any Area 3 question.
Because perspective is everything. You really need a strict, logical pathway to prevent yourself from making assumptions. So here are the first 3 vital steps of orientation that you must apply to every single question. Step 1, identify the statement perspective. Are we looking at the government-wide level or the fund level? Step 2, identify the specific fund context. Is it a governmental, proprietary, or fiduciary fund? Step 3, determine the basis and measurement focus, full or modified accrual. For example, think about a non-exchange revenue question involving property taxes. If you don't do steps 1 through 3, you won't know if you should recognize that tax revenue when it's legally levied under full accrual, or if you need to wait until it's actually measurable and available within 60 days under modified accrual. You absolutely must answer these 3 context questions before you even glance at the numbers in the prompt.
Okay, so once you're fully oriented, you execute the final 3 steps. Step 4, classify the transaction correctly based on those rules you just identified. Step 5, decide whether a reconciliation is needed to bridge the perspectives. And Step 6, determine the ultimate reporting effect. To kind of picture this, imagine a question asking you to classify the equity of a specific fund. If you skip Step 2 and you don't realize you are strictly in a governmental fund, you might mistakenly look for net position, which remember is a government-wide long-term term. Instead, by following the steps, you correctly classify it as fund balance because you know you're dealing with short-term, current financial resources. This logical flow, perspective, context, basis, classification, reconciliation, reporting effect. This is your master key to Area 3.
Section 6. Common Area 3 traps and where students predictably lose points.
To wrap up our map of Area 3, I'm going to act as your seasoned guide for a minute and point out the hidden traps on the path. The absolute #1 way candidates lose points is by defaulting to their corporate accounting instincts. When you're rushing on exam day, your Area 1 muscle memory kicks in, and if you apply for-profit logic to a governmental fund question, you will get it wrong every single time. The second major trap is confusing government-wide reporting with governmental fund reporting. Just think back to our $4 million building example. And flowing right from that is the third trap, blindly applying full accrual principles, like depreciation or long-term debt recognition, to a fund that strictly requires modified accrual.
Terminology is also a massive, massive hidden trap here. You cannot confuse expenditures, which belong to modified accrual funds, with expenses, which belong to full accrual statements. I know they sound incredibly similar, but they exist in completely different accounting universes. Similarly, do not mix up the short-term fund balance with the long-term net position. Another sneaky trap is missing inter-fund classifications. Remember that internal transfers between departments often completely vanish during the consolidation to government-wide statements. Why? Because the government can't owe itself money. And finally, forgetting that reconciliation is the mandatory bridge connecting these two very different reporting perspectives.
So as we wrap up this explainer, I want to leave you with one final, absolutely critical question. On exam day, when that clock is ticking down and the pressure is on, will you remember to orient yourself in the correct governmental accounting world before you start crunching the numbers? Because true mastery of Area 3 doesn't come from memorizing complex math, it comes from discipline, perspective, and unwavering logic. Keep this mental map handy and always apply that 6-step framework. But ask yourself, are you ready to dive into the deep end of encumbrance accounting next? Stay curious, stay disciplined, and you will absolutely conquer the BAR exam.